VP of Options at Simpler Trading, Miss Danielle Shay, back with us to have a wrap up. I like this because it's the end of a crazy week. It's the end of a few major events, let's be honest, when it comes to, the mega cap tech earnings wrapping up, the Fed behind us now. So let's jump right into things here, Danielle, because there's a lot to cover. Give us your take on the Fed. Obviously, we get what was expected, but what followed was a little bit different.
Well, I was looking for a little bit of a relief rally on the Fed, just mainly because, I just felt like the news was pretty priced in. And so I think that it made sense that there was a little bit of a relief rally, like, hey, this could have been a lot worse. This is what we expected. But I think the worst part that happened as it relates to this meeting is the move yesterday, because the move after the Fed, a one-day short squeeze, that could have turned into something more. We could have seen more buying. We could have seen a better rally off the lows, but it was just a one-day move. That reversal was completely nasty, especially when you look at the large cap names. You've got Apple, Microsoft, Tesla, all falling. And so, if those go, so go the market.
Actual trade setup here, though. Tell us a little bit, or walk us through, I guess, how you approach trading this event. Is it a, kind of one and done in the moment type of trade, or do you look to play some of those bigger names over the coming days?
So, after the Fed, I did trade the short squeeze higher. I just traded it in the spiders, just because that's generally going to be the easiest way to do it. You can also do it by picking the relative strength names, which are going to be Apple, Tesla, and Microsoft, but I just chose the index here. In this instance, I really hate to say it, but I just heard Sean say that he was shorting Apple, but I think that Apple, Microsoft, and Tesla down on the lows. If Microsoft breaks 270, if Apple breaks 150, we could see a Google-like, Amazon-like movement here. And so I'm watching those key levels on those major large cap stocks, and I've been shorting the Qs all year. If those stocks start to break, I'm just going to short it again. I'm going to try to trade the Qs down to 300, and then after that, we'll have to see if that level holds.
So we spoke a little bit about this last time we had you on the show, the fact that you've been kind of leaning on the short side ever since the beginning of the year, and great job on that, because, hey, all we've done since the beginning of the year is go straight to the downside, it seems. So going forward, is there still room, as you were saying, for some of these to, be a potential trade setup even now?
I do think that there's still room, because what we've seen happen to the former COVID darlings is what I call them. You've got TDOC and Roblox and Roku, PayPal. Those stocks, of course, they went up so high, they needed to come down, but at some point they really started tanking, and that disease has kind of started to spread into the large caps. So, for me personally, when I'm looking at what I can do, obviously shorting on the lows is not the best decision ever, but at the same time, because we are on the lows, all it's going to take is one major gap down and we could have capitulation. So if that happens, I'm definitely going to keep shorting. You want to be careful here, but honestly, the best setup that I have had and what I've been watching is earnings. When you look at these former COVID stocks, a lot of them that are still losing money, they're getting absolutely trashed after earnings. And so I've just been trading the earnings calendar. You can come in prior to the report, short them then, or if you want to wait till after, short them after. But for me, that's been the best catalyst, and it's kind of prevented me from, shorting at the lows on the indexes.
On the other side of the story here, Danielle, is there something you're looking for, or what would it take, I guess, for you to see something specific that would say, okay, things have changed, maybe now we go back to the at least the top end of the range?
I would need to see the semiconductors come back to life. The semiconductors are really important market leaders. You've got NVIDIA and AMD down substantially on the year. I would need to see those really start coming back. I would need to see them break out of their downtrend, and I would need to see Apple, Microsoft, and Tesla hold the lows that they're on now and have actual buying coming in. What we've seen so far is just regular, continual selling, and the value that you have in those stocks, it's massive, it's huge. And if you have one more day like yesterday, it's not going to take that much for us to continue sliding.
Your take on oil here. We haven't really touched on the energy market specifically. There's a lot of individual, kind of catalysts with individual stocks, but I mean, it's hard to avoid this move that we've had in oil itself that continues to show all kinds of strength. Is there one or two names maybe in this group that are showing you that they are maybe worth a long at this point? If so, what are those? And then going into next week as well, what are you looking at? What's got you excited for, the market in general now that all these big events are behind us?
So, when it comes to energy and oil, it's definitely really the only relative strength sector. So if you want to be long anything, it's got to be energy. My main problem with it is how much higher can it go? I'm looking at crude, and I think crude can go to 120 a barrel. So, that will definitely help, Chevron, Exxon. I also like Marathon Petroleum. But a lot of these names are up on the highs. So, you can't really come in and buy them on a brand new high. If you want to be involved in the energy space, you're just going to have to wait until we get another pullback, until we get a better entry. So, I like it to the upside. I'm definitely not going to short energy here. I think it's really the only thing you can be long, but you have to get a good entry.
Hey Danielle, what's up? Just quickly here, just for everybody, just come to my screen quickly if you can. We just reshorted Apple there. You inspired me, Danielle, so it just ripped up there. We reshorted it and we'll cash out on that one and do backflips just because we have Danielle on as well. What's up, Danielle? That was you on Twitter, right? Me and you going back and forth?
It was. I'm so glad that you were suspicious because, there's so many fakers out there and you never know.
Because you messaged me and said like you reported 4 fakers or something like that. And I was like, oh my God. So thank you so much for doing that. What I wanted to get to quickly, there's a lot of questions for you. And specifically, I had one, and you mentioned names like TDOC, Peloton, Roku, some of those COVID darlings like you mentioned now getting beat down. My question for you is this. Options is such, honestly, for most of us anyways, really tricky. And I'm sure even, when you were going through the motions of learning how to do it, you got to be very alert. You got to be on top of everything. So I like the call of trading into earnings. But I have the TDOC chart up right now. This was earnings here from $60. And then we know what happened. It completely fell down. So maybe this is a bad example because if you had any sort of a put option on this, I don't even think it mattered what strike you had. You cashed out on this when you get like a 40 to 50% move down. But let's just say, for example, a stock like Peloton or whatever stock you want to talk about, to be completely honest with you, maybe that hasn't reported yet, but yet is so beat down. What kind of, if you're going to report on a Wednesday, let's just say, do you play the weeklies? Like, would you buy a put or something, or sell calls to something to be executed that Friday, like the weekly? And then what kind of targets do you look at? Strike prices, things like that, because some of these names are just so beat down that I myself am nervous shorting into a print from a quarter.
Hey, so those are great questions. And I will tell you that TDOC was actually my best trade on the year so far. I bought I think they were Delta 50 puts. So, okay, let me go through these questions. First of all, I will tell you that buying outright puts on earnings, it doesn't work very often. It's only going to work in the instance that the ticker completely tanks like TDOC did. But this quarter in particular, stocks have been tanking left and right after earnings, which is why it's been working. So I do want to caution people that, you have to be careful with it, but this is how you kind of get around it. So options, they increase in value going up to an earnings report, right? This is called the increase in implied volatility, the increase in IV. So what you will see when you're looking at an options chain is you will see that the implied volatility is the absolute highest the week of earnings. When you're buying options, you don't want to buy incredibly high IV because what happens is the report comes out and that IV gets crushed. What that means is that, let's say the option's worth $5. Let's say then the report comes out. Well, now the option's actually worth $2.50. So the only way that you can make money on it is if the move in price makes up for that implied volatility crush. So when I'm buying options on earnings, which again has to be done when something you really think it's going to just get destroyed, you want to go the next week out. So if there's an earnings report next week, you want to short it, don't buy it in that series. look at the next week and I buy the Delta 50s because they're slightly out of the money, but they're close enough to where the price is, which makes them cheaper. But ideally what happens is the stock falls and then it goes in the money. And you also don't get as much IV crush because you're not in the earnings series. Now, if you want to sell options, you absolutely want to do that in the earnings series because you're trying to take advantage of the implied volatility crush. So like DKNG, for example, I sold calls on it yesterday, but those were expiring today. And I bought puts on it, but those are expiring next week.
For DraftKings there, you see the high was $66, down that 7%. A quick question, I just asked the audience here, what about scalping options? Like, do you if you were to, let's just say you had, 10 calls or something like that, is there a spot where you say, do you get out of them all at once? Do you sort of leg them out? I guess this is sort of, it's not a great question because it's going to depend on, I guess, the time frame that you have for those options. But do you recommend for traders to sort of have targets in mind when that's hit, you just get out? Because even when I'm trading options, you get that greed factor all the time. And it's like, oh yeah, like I'm 100% in the money. But if this just moves down 50 more cents, I'll be 200% in the money. Like, how do you deal with that? For me, when I'm trading, it's like if I have 100 shares that hits my target, I'll try to get out of like 80 of them and then hold 20. So try to hold 10 to 20% as an example. Do you ever do anything like that where you say, hey, I just hit that home run, but let's wait for maybe a little bit of an extended move and maybe you'll hold 10 or 20%?
Oh, absolutely. I mean, scaling is really important because you do have that greed factor that takes over. And especially with options, I mean, the problem is they expire, right? And so, I mean, you could be up 100% and then you're trying to make 150 and then all of a sudden you're at a break even. So, I mean, I personally have price targets between 25 and 100%. So typically, and especially in this market, because it's so volatile, I've been trying to stick to around the 50, 60% range. But when I get that, if it's still going in my direction, if I'm sitting right here and I'm monitoring it, I'll kind of like hold it and let it keep going. But it's perfect to scale out because that way you already paid yourself. You can let the runner run, and it's just a much more disciplined approach to trading.
Danielle, I'm not sure if, again, thank you for the great answer. I'm not sure if I've asked you this before, if you have kids or not, but I'm going to say happy Mother's Day anyways to you and to yours. So thank you once again for coming on the show and providing so much information, so much valuable information to everybody. I'm going to throw you back to Brendan, but happy Mother's Day, Miss Danielle Shay. Thank you so much.
Great point. Well said. Yes. Happy Mother's Day, Danielle Shay. Quickly before we let you go, is there, I mean, we are through the big ones as far as earnings are concerned. Is there one or two maybe next week that you kind of have starred on your board in front of you there?
I wish I had an answer for you. I didn't finish my watch list yet. I feel really silly, but you know what? Next week, especially in this month, I did look at the month ahead and we have a ton of cloud computing companies that are coming up, cybersecurity. Those are the ones, and the former IPOs. Those are the ones that I'm really going to be doing my in-depth research on. I usually Friday and Mondays when I do all of my research. So I'm going to be compiling that list on Monday. And you know what? I'll post it on Twitter. How about that for the earnings destruction ideas for next week?
VP of Options over at Simpler Trading, we appreciate you being flexible this week with your scheduling. We know you're busy. Have a great weekend.
Have a great weekend.
Great stuff. As always, lots of interesting ideas there.